Welcome to the B2B Market Podcast powered by Canadian SME. In 2026, relying on a single market is no longer a safe bet. It's a bottleneck. With shifting geopolitical tides and new trade agreements, the path to true business resilience lies in global diversification. To discuss this in detail, we are joined by Ross Prusakowski, Deputy Chief Economist and Director at Export Development Canada. With over a decade at EDC and deep roots in economic analysis, Ross leads the team responsible for highlighting global risk and opportunities for Canadian exporters. He's here to break down the latest trade confidence index and show us where the world is buying. So let's dive in. Ross, it's great to have you with us today. How are you?
I'm great. Thank you so much for having me.
Ross, EDC recently released the latest trade confidence index, which serves as a pulse check for Canadian exporters. What insights does the trade confidence index reveal about Canadian exporters today?
Yeah, so I think there's a lot of insights that we're getting from this latest release. The first off is that the confidence of Canadian exporters has improved a little bit from our most recent survey before in last fall, but it's coming off from one of the lowest periods, one of the four lowest recordings we've ever had over the history of the survey, which is now 25 years old. And we're still not seeing an incredible acceleration in confidence. So it's a bit of an improvement. And if you think back where we were last fall, that probably makes sense given the state of the world, at least when we did the survey. But it's not like we're seeing Canadian exporters being incredibly pleased with the state of the world or the opportunities that are facing them. I think the other things that we're seeing as well is Canadian exporters are looking at different markets around the world for opportunity, that the trade environment that we've been facing, the trade challenges that companies have been seeing, as well as, some of the changing trade policy from some of our key partners is really changing how they're having to look at the world and how they're having to change and focus in terms of trying to drive new business as well.
Seeing an uptick in confidence despite the global volatility shows the incredible resilience of our domestic business leaders. Now, let's explore how Canadian exporters are diversifying beyond the US to reach new global markets. Why are exporters diversifying beyond the United States right now, Ross?
So I think there's a few reasons. I think one is very much US driven, which is obviously the changes in policies, tariffs, and trade agreement implementation under the Trump administration since it took office last January. We've seen an uptick, obviously, in tariffs, which have been high, low, on, off, depending on what part of the year you're talking about. We've also seen a lot of other adjustments, so including removal of the de minimis, so importing of things below $800 tariff-free into the United States. That's impacting a lot of small and medium-sized enterprises. So previously, a lot of Canadian exporters were able to ship to the United States, benefit from our lower Canadian dollar relative to the US dollar. And because we had the same understanding of language, of business culture, and the geography was so close, it was really easy. Now what we're seeing is with these barriers to trade increasing with the United States and with maybe growth slowing a bit relative to other parts of the world, especially in Asia Pacific, where you have a large growing population and a large growing middle class, it's really changing how companies are looking around the world, that they are seeing more opportunities and that things that may have been scary in terms of, different business cultures, different judicial systems, different economic partners that you have to work with that they may not have as much familiarity are actually a little bit less scary given the challenges that we're facing in our traditionally largest trading partner.
As you rightly said, diversifying your customer base is clearly the most effective way to insulate your businesses from, single market shocks. Now, let's discuss how Europe and Asia Pacific are emerging as key expansion markets for Canadian exporters. Why are Europe and Asia Pacific attractive markets for Canadian exporters, Ross? Can you elaborate on this?
Sure. So I think there's a few common themes between the two of them, but also some differences. So I think one of the common elements is for Canadian exporters is we have free trade agreements, both with Europe through the CETA agreement, and then with a lot of Indo-Pacific, Asia-Pacific through the CTPPP. We already have existing agreements that Canadian companies can leverage that have lowered tariff barriers, that have lowered non-tariff barriers, that really open the access for Canadians. So it makes it a lot easier and a lot less challenging. At the same time, we're seeing a few differences. So in terms of Europe, though it may not be growing at aggressive growth rates in terms of economic growth as we see in other parts of the world, it is an incredibly large market. The European Union, depending on how you want to count on it, is the second largest economic bloc in the world. And so though you may not get high highs of massive growth, you're still talking hundreds of billions of dollars in economic potential and, various markets that we can sell to. And at the same time, in Europe, we have existing historical business connections. You think about the integrations we have through Western Europe, through existing relationships in other countries as well, through some of the similarities in terms of needs, whether it's compatibility with the energy sector with a country like Norway and agricultural sectors with other parts of Europe. There's a lot of synergies there that Canadian companies can tap into. On the Indo-Pacific side of things, where it's an opportunity that we're seeing Canadian companies pursue, is it adds a lot of opportunity for growth. So I already mentioned that previously, but one of the fastest growing regions in the world by population is the Indo-Pacific. It also has one of the fastest growing populations in the world in terms of middle class growth. So not only is it growing larger, but it's growing wealthier. And at the same time, the Indo-Pacific has a lot of trade enabling infrastructure that's already being built up or is expanding at a pretty rapid pace. So it's becoming much easier place to do business, even with the trade agreements in place. So I think those are some of the key elements we see behind Canadian companies actively pursuing both Europe and the Indo-Pacific.
Leveraging our global trade agreements, I believe, is the ultimate cheat code for SMEs, who are looking to compete on the world stage. To the exporters watching this, in 2026, a wait and see approach to global trade is losing strategy. Canada has free trade access to 51 countries. If you are not leveraging those agreements, you are leaving money on the table and letting your global competitors win by default. Diversification isn't just a buzzword, it's a survival mechanism. Use the tools EDC provides. Look at the Asia Pacific and European markets and stop letting the fear of the unknown keeping your business small. Ross, now let's look at how exporters are investing in productivity to become, globally competitive. What trade enabling productivity mean for businesses today?
Yeah, so I think there's a few things it means. First off, I think it means in terms of investing in the productivity is it makes you more competitive. So, the more technology, the more infrastructure, the more technological enhancements you can drive your cost basis down. That doesn't mean that you have to, change your methods of production radically, but it does, allow you to expand into new markets. And because we're competing, as companies are looking to compete beyond the United States, the currency mismatch with the Canadian dollar is a bit different. In some markets, the Canadian dollar might provide a bit of a boost. In other ones, it doesn't. So the more productive that you can be as a producer, the much better it puts you into competition with external and global peers. And especially when you look at the markets that we're seeing Canadian companies move into Europe, into the Indo-Pacific, there is a lot more global competition. So you really need to sharpen your skill sets. So that does mean bring to bear the latest technology, whether that is, AI enhancements in terms of your production capacity or your production lines, investing in machine and equipment to replace, manual labor, or, looking to blend some technology with some local support to really, make sure you can understand local markets. You can make sure you're translating into local languages as required to help you assess opportunities in terms of business development. There's a lot that technology can do to support kind of the engagement for Canadian companies. And all of that, especially with some of the tools, some of the widely available tools that are out there, especially for small and medium-sized enterprises, it's not as challenging in terms of talking about, large dollar contracts or mass investments. On the small end of things, you can start pretty easily with some incremental gains that can really help grow and support your kind of trade growth as well as your business growth.
Now, finally, let's explore how EDC initiatives are helping businesses manage tariffs and market uncertainty. Ross, how can small businesses benefit from the Trade Impact Program?
Sure. So I think there's a few different ways that you can benefit from the Trade Impact Program, but there's also other services that EDC offers as well, in addition to the Trade Impact Program, that I think are just as important. So maybe not directly on the Trade Impact Program, but we have 26 representations around the world, a number that will probably be growing in the near future, that allows Canadian businesses to interact on the ground with someone from EDC and interface with international businesses. So it's a huge opportunity for companies to leverage. Along with our partners at the Trade Commissioner Service, there's a lot of market information, business information that flows back and forth and can help support Canadian companies in their trade journey. Additionally, the Trade Impact Program is an element of our support that we make available to companies, as well as other financial solutions that can really open up opportunities for Canadian companies. So this includes making things like working capital available, insurance, accounts receivable insurance, and even up to larger companies. There's different degrees of financing and including project financing at very large kind of scale. EDC has a long-standing history providing a lot of these financial products, and especially around the world. We're more than 85 years old, so we have a decent understanding of many places that Canadian companies are looking to, and can really help understand and tailor support for local markets. The Trade Impact Program, which was launched last spring to help Canadian companies navigate the challenges of U.S. tariffs, is also a big support. It's providing, we have additional $5 billion over 2 years that we're making in support to help companies that are eligible across a range of sectors and across a range of products navigate the tariffs and make investments into new markets or into productive capacity to allow them to grow and diversify their market basis. So all those are key elements. And then maybe I'll put a small pitch as well as another product, one my team and I'm very engaged in is market intelligence and information. So there's teams like mine that produce a lot of products, whether that's sectoral analysis, economic analysis, even analysis of how to understand international trade language and trade contract terms that Canadian companies, especially small and medium, can access for free to help grow their business and to navigate some of the implementation of some of the trade barriers and challenges we're seeing. So while the Trade Impact Program is a key block, it is by far not the only means of support that we offer.
I believe having a $5 billion safety net and world-class intelligence from EDC really gives Canadian firms the unfair advantage they need to dominate globally. Before we wrap up, Ross, what advice would you give to businesses who are entering global market for the very first time?
So I think one of the biggest pieces is really going back to that market intelligence and understanding what markets they're looking at, whether it's an opportunity that the company is proactively seeking through their own business development activities, or whether it's an activity or an opportunity, I should say, that comes in through, opportunities of trade shows or just contacts that they have in the world. Researching target markets is incredibly important. You can use us at Export Development Canada. As I mentioned, we have products like our Country Risk Quarterly, our Global Economic Outlook, our Global Export Forecast, which can really outline the economic shifts and contours we're seeing in the global environment. But there's also a lot of opportunities to tap into partners like EDC, as well as I mentioned the Trade Commissioner Service, which is a Government of Canada service that's also free for companies to really help understand markets around the world. You can also, use access that EDC has, where we have some support. We can help companies understand their own balance sheet and secure working capital and other financial products that might be available, and then work with EDC and your existing financial institution, your bank partner, to help understand and unlock additional benefits. And then finally, there's a lot of opportunities to build relationships, whether it's by using existing free trade agreements, by using existing on-the-ground presences from EDC, the Trade Commissioner Services, to help understand, the business environment, the regional differences, the trade culture, the legal culture as well that companies might be facing. So I'd say if companies do nothing else to start preparing for trade, doing market research and reaching out to those existing products, whether it's EDC or some of our Government of Canada and other partners, really will help you make that foundational case to understand what you're about to get into in terms of markets and in terms of opportunities.
That is really a great reminder that with the right data and right partners, the global market is much smaller than it looks. Thank you so much, Ross, for joining us today and sharing your insights with our listeners.
No, thank you so much for having me. It's been a pleasure.
That was Ross Prusakowski from Export Development Canada, a masterclass in why global diversification is the strongest move you can make for your business in 2026. Thank you for tuning into the B2B Market Podcast powered by Canadian SME. Be sure to subscribe and visit b2bmarketinsights.com for more resources and tools when it comes to exploring the exports across the world.